Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, March 15th, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you individual financial advice. Please do your own due diligence. It's your money, it's your responsibility. Okay, before I get started, just wanted to remind folks about if you're interested. We do have a Facebook page. It's free. I post there different charts from these or graphs or whatever from these presentations and things during the week that I run into. It's not really long form. It's more just, charts and whatever's happening and memes or whatever, what have you, news items. So if you're interested in that, check down into the show notes for the Actionable Intelligence Alert Facebook group if you have some interest in that. So here's a quote from Scott Bessent. He's our U.S. Treasury Secretary. I think it kind of sums up what we're trying to do here, what the Trump administration is trying to do. Quote here from him. It says, "The easy thing for us to have done would have been to come in and just keep this massive spending going, but it's unsustainable. Could we have kept it going for another 4 years? Yeah, maybe, but you're risking financial calamity down the road." And so this, I want to speak to this a little bit because there really is a large group of people. Well, it goes back, I think some of it's just anything that this particular administration does, a certain segment of the population is just not going to like it regardless. I mean, I think Trump said that during his joint session speech when he said he could come up with the cure for cancer or something like that, and the people on the one side of the aisle would still, not like it. So that's just a manifestation of that, what we talked about, this football game mentality. People just need to win in politics or whatever. But the bottom line is that um, a large part of the population simply doesn't understand the financial condition that the United States is in. And so I hear these people, lamenting about this or that or whatever. Most of the time, most people are uninformed. They don't really know what's going on. Um, there is a bell curve. There's people that are midwits. They just don't have the mental capacity to even comment on this stuff. They just react emotionally to something they see on social media or on the news. They don't really know how to do math. They don't really delve into these things. They're not capable of doing it. Um, but that's not a slight at anybody. That's just reality. We know these people in our lives. Okay, they live in chaos. They're constantly don't have their act together, but yet they feel obligated or somehow need to get their opinion out there on these things. The bottom line is that we're on an unsustainable trajectory. I heard one person lament, they said, well, how can you be against getting rid? You know, I'm not for Social Security and Medicare. I know that these are Ponzi schemes that will eventually fail. The math is goes without saying, but that's what we have. Who would be against weeding out the people that are fraudulently getting Social Security and Medicare benefits? We understand it's in the billions of dollars. Why are you against that? That's not cutting things. What we're trying to do is preserve what we have for the people that are entitled to it, not people that are scamming the system or stealing from the system. But yet there are people that are against that. So they come on social media and they say, well, Trump's cutting Social Security. No, they're trying to find the people that are stealing. There's millions of people that are stealing. Okay. This has been allowed to go on for decades. And so it's actually quite shocking that how could you be against that? No one's talking about cut it. Now, I think down the line, things are going to have to be reformed or it's just going to crash into a wall. You could either have, as Doug Casey has said many times, you could either have a controlled demolition. When they knock a building down, you could see how the guys that are the explosives experts, they can demo a building inside of a city block with other buildings around it and not damage it. They can get the building controlled uh, the controlled demolition falls in on itself. You can do that, or you can just, randomly let the thing fall over and cause more damage. But yet there's people that will come on and argue with no basis of understanding of math or compounding or the financial condition or the historical narrative of what happens with other countries that have pursued the policies that we're currently pursuing and argue with you and say it's not a problem. And, that's just how it is. The other thing that gets me are all these federal employees that are being laid off, as if people in the private sector never get laid off, as if there's never downsizing in companies, as if people don't, um, pick up themselves off. Nobody wants to get fired. No one wants to lose their job. I get it. Okay. I've never been fired from a job. I've been fortunate. I've moved on to other jobs for better deals, but I've never been laid off or fired. And so I don't know the emotional toil it takes. But 99% of the people find another job and move on. And sometimes it can be better for them. Why is this such a devastating thing that, we don't want your services because we're trying to get these bloated bureaucracies like it's the end of the world? I mean, that doesn't resonate with most people. People are like, "What's this guy talking about?" I've been laid off before from my whatever business or company or whatever have you, or I've lost my business, and this person's on here crabbing because they got downsized. It's been happening for 30 or 40 years as we financialize the economy in the private sector. Nothing new here. That getting on there and crying about it, that doesn't resonate with the American people. I'm sorry. And as you see, just like I predicted, the full court press from the left-leaning establishment media, the parasitical class, has got a full court press on. They find all the sob stories to try to demonize this effort. Why are you against getting rid of waste, fraud, and abuse? Why are you against having the economy, the government be efficient? Okay, that's crazy. Why are you against getting rid of? Well, we know why, because basically there really isn't a left wing. Okay, it's a facade. It was financed by stealing money. We've talked about this before from the government. The government, you regular people out there that pay your taxes are getting buried by regulation. We're financing your own dispossession and financing your enemy and financing the other side. That's basically what was going on. And so, of course, and people say, well, you have no proof of that. Well, the Stacey Abrams person, this disgusting woman that ran for governor in Georgia a couple times, she was getting grants and, created this NGO or what have you. And she was only able to raise $100 on her own. But somehow, because of all the grants and all this stuff, she was getting these grants and things from the federal government. And of course, the people that she hires there, they're all highly salaried. They lunch it up. They're traveling around. They're hiring consultants from the left and the DNC and all this. And all those people are sending money back to DNC PACs and everything. That's just how it works. Okay. And so, yeah, that's going to end. And that's why they're upset. But it has to end. If we don't, then this whole thing's going to implode and things are going to be worse for everybody. Here's Ray Dalio talking about U.S. debt. I'll put a link to the article. He was interviewed, Bridgewater Associates guy. Quote, the first thing is the debt issue. We have a very severe supply-demand problem. He's talking about in the debt market. Bridgewater founder Ray Dalio told CNBC's Sarah Eisen at Converge Live in Singapore regarding U.S. debt. Dalio, who was speaking on the same panel as Salesforce CEO Mark Benioff, said, this will require the White House to sell a quantity of debt the world is just not going to want to buy. It's something we've been talking about. The debts is that big now. You have to roll 60% of the federal debt, which is around $33 trillion now, 34 trillion in the next 2 years. It's a quantity of debt that cannot be absorbed by the market. Quote, that's a set of circumstances that is imminent, okay? That is paramount importance, he said, adding that most people don't understand the mechanics of debt. Goes on to say the U.S. deficits, that's the yearly, the more we spend than we take in, that gets added to the debt every year. The U.S. deficit needs to go from a projected level of 7.2% of gross domestic product to about 3% GDP, Dalio said. And that's what they're trying to do. That's part of the three arrow package, right? Get the debt to GDP down. That's what Bessonette said. get the debt to GDP down to at least 3%. 7%, the deficit at 7% of gross domestic product, that's wartime levels. That's like, you know, existential threat to the United States from the Axis powers. We have to do everything we can to win the war levels of debt. So, of course, if you start cutting this spending back, if you start getting rid of all this waste, fraud, and abuse, if you start getting rid of these non-necessary employees, yes, there's going to be an impact to the gross domestic product. That's why you're seeing real estate prices crash in the DC metro area. You're going to see consumer spending pull back and tighten. We've talked about this, but we have to do this. If we don't do it, if we don't get serious about this, we are going to end up, well, as other empires have, in currency debasement, and everyone's suffering from higher inflation and all kinds of other economic and societal dislocations that come from trying to keep a decrepit debt system afloat. And again, most people don't understand. Most people just look at their near-term situation or just don't like it because the other side is doing it. So yes, I don't know if they're going to be successful and able to do this. I'm not sure. I think it doesn't, I told you last week, it was the week, last week of the week before, I think it's a gambit they're doing. It may work, it may not work. Again, you don't have much time because you have you have a congressional election, in 2028, right? Or what are we at? 2026, sorry. Okay. And so if we know, if the Democrats get back in power in the Congress, well, you think they're fighting tooth and nail now, they're going to tie it all up and then you see the same thing going on with all these ridiculous federal judges trying to stop this stuff. And, you don't, that's what they're trying to do. Slow it down, gum it up any way they can so that they can get Hakeem Jeffries and the Democrats in the Congress in 2026, and then they can put the kibosh on all this. They can impeach Trump, impeach Vance, impeach everybody, do all this nonsense that they're going to do, and go back to business as usual because that's where their power came from. They don't have any money. Nobody actually, most of the people in the country don't believe any of this nonsense they were pushing. It was repudiated. But if they have the money, who has, you got that kind of money, billions of dollars being siphoned out of the federal treasury to support this nonsense, you can create a whole Potemkin village. Like there's this, you can support Act Blue, you can support Antifa, you can support all these ridiculous NGOs that do things that are counter to the majority of the people in the US. So of course they're going to fight it tooth and nail. It's existential for them. So here's the Atlanta Fed model. Signals a GDP decline in the first quarter. We've talked about it. I mean, that makes sense, right? I mean, if you're cutting back all this government spending and laying all these people off and you're a 70% consumer-based economy, well, what do but that's the idea. Take the pain early and hope that you get lower rates. Hope that you can accelerate the economy going into these elections. That's why I call it the the Reagan Volcker gambit. So this came out, federal FHA subprime bubble is back, evidently. This is the share of borrowers with debt to income ratios greater than 43%. If you go back to the GFC, when we had the worst real estate blow up of all time that created the great financial crisis, the implosion, everybody remembers that. We were at around 45% of the borrowers had debt to income ratios that were greater than 43%. Now we're at 64.4%. So I'm not suggesting, I'm just throwing this out there. I'm not suggesting to you that we're going to have another 2008 great financial crisis and real estate's going to collapse, but real estate prices are coming down. They're too high relative to people's incomes. And, now we're going to, is it possible we could have another people start defaulting? Well, if we have a recession, we could. Housing's in a big funk. So I thought this was interesting. So we've talked about shale in the US and how it basically kept us from having an oil price crisis over basically the last decade because of the huge amount of oil that came out of these basins. The argument that I've been making is, and some others have been making, is that we're near the end of that now. And I'm not suggesting we're going to collapse or anything, but supply is plateauing, then we'll eventually go into decline over a period of time. And we've had all kinds of data points we've provided for that, seeing more gas coming with the wells in the Permian, seeing all kinds of, Tier 1 locations, so-called, being drilled off and now moving into less productive areas. The data starting to manifest from that. So we're starting to see more and more data points that are suggesting this may be the case. Now, again, this just may be a manifestation of price because prices have been low, drilling has retracted. And as I've said before, maybe, people that have the counter argument, that's just a manifestation of price, they will say that, well, if the price goes to 90 or $100 a barrel, then you'll see all these rigs come back and you'll have a big surge of supply. I don't buy that, but that's what some people say. And so here you have a statement this week from Harold Hamm, who was the co-founder and chairman of closely held shale driller Continental Resources. They basically had most of their drilling up in the Bakken in North Dakota. And he says, so he kind of knows what he's talking about. So he says, he warned that U.S. drillers need $80 a barrel oil to be able to cover costs at some wells, not all wells, at some wells. Quote, there are a lot of fields that are getting to the point that's real tough to keep that cost of supply down, he said in a Bloomberg television interview. When you get down to that $50 oil that you talked about, then you're below the point where you're going to, quote, drill, baby, drill, unquote. So um, that's the argument I've been making, that costs are going higher because the less productive wells are now being drilled. Not everywhere, but we're getting more and more of that. It's going to get more and more difficult to increase production. And if you do drill, baby, drill, and oil prices go down, or prices do go down to $50 a barrel, it makes a lot of places where you can't recover capital. And we're not in the drill, baby, drill days where people at these explorers are just compensated for just increasing production. These things have to cash flow. Okay, it has to make sense to make the investments. And so I further believe that we're going to see higher oil prices later in the 2005 and into 2006. That's my what I've been forecasting. So right now, sentiment in the oil market's terrible. I think oil's been down now for 8 or 9 weeks in a row. That really hasn't happened in a long time. And so I look at it as an opportunity because I just don't think the drill baby drill thing's going to happen like people think. Now, it's the reason they say it's easy to understand. If you start talking about, if you're trying to talk on a 2 or 3 minute sound bite for Fox News or, some business show, it's easier to just say drill baby drill. People know what that means instead of suggesting, well, we're trying to, as part of the three arrow package, we're trying to raise energy production by 3 million barrels of oil equivalent. Then that precipitates the question, what does that mean? Well, that's natural gas liquids, refinery gains, yada, 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 conversions, their eyes start glazing over. So, when you're dealing in politics, as many people, political thinkers have said many times, it's better just to stick to 2 or 3 big ideas and use simple language. That's so the hoi polloi can absorb it and keep repeating it. And so you get to the same point where energy prices go down, but you don't necessarily, this is how people kind of associate it with, oh, I see the oil price is down, my gas prices are down at the pump. I guess the drill baby drill thing's really working. Now, oil prices are down because of economic weakness around the world. That's going to change, right? We don't stay in the economic funk forever. We had announcements out of China this week about huge amounts of stimulus programs. Europe is talking about huge stimulus, okay, in Germany and the EU, increasing defense spending. I think the German Merz just talked about in Germany about a huge infrastructure plan, whether or not these things go through. But that's what I'm talking about. You're spending all this money, plus just the year-to-year growth in energy demand that happens of about 1 million to 1.5 million barrels a day. So um, the cornucopia of U.S. shale at $40, $45 a barrel, that's in the rearview mirror. That's 10 years ago. Currently, it's not the same. You don't $50 a barrel oil doesn't work for shale for a lot of places in the U.S. That's straight from Harold Hamm. That's not John Polomny saying that. So you can either listen to him or not listen to him. So here's Josh Young. He said, he tweet here it says leading U.S. shale companies like Continental and EOG initiating international exploration endeavors is a good sign that core U.S. shale inventories are depleting. So here's a blurb here from quoting another tweet says Continental Resources signs joint venture to explore shale oil gas in Turkey. So if things are so wonderful here and there's so much opportunity in the US and the costs are so low, why is Continental Resources, whose core competency is drilling and operating in the Bakken in North Dakota, all of a sudden heading over to Turkey? Makes no sense. Okay. The reason is because um, as Josh says here, core U.S. shale inventories are depleting. The opportunities are getting less here. That's when one could infer, and when you combine it, Continental Resources, if you combine it with what Harold Hamm said, who's the co-founder and chairman of Continental Resources, okay, there you go. Start putting the pieces together. U.S. shale is not going to be the cornucopia it was. And so when the market, I think, finally absorbs this data, or this is going to call, and says, hey, shale's really not going to go up by 3 million barrels a day. And then that's going to get priced into the market, into the oil price. That's what I'm suggesting, especially as these economies, turn around and all this stimulus hits. Okay. Energy demand is going to just continue to rise regardless. So we'll see. Here's a chart. China's crude inventories dropped to 5-year low, as you can see. Here's their total inventories. Here's total inventories of global. Here's Chinese, sorry, inventories. I mean, this could just be a manifestation of them getting more natural gas powered vehicles and electric. I don't know. But uh, again, global inventories are down regardless. And so they're at lows. That's been another. Now, some people, there's an argument about that too. It doesn't really matter. It does matter. Things, price basically is sentiments based on price. And so price is down, price is in a funk. So sentiment is bad in the oil market. And so all news is bad until it's good. I mean, it's just how these things work. And so I'm of the view again that the oil price is not going to be heading down to $50 a barrel unless you have a worldwide recession, which I don't think anybody's forecasting. And um, later this year and into 2026, I think we're going to have much higher oil prices. And I think that where the oil shares are now, you're looking at some pretty good values here. I mean, there's quite a few companies that are cash flowing double digits, 10 to 15, 18% free cash flow yields at current oil prices. These gems exist and they're not over indebted anymore. And so they are doing what with the excess cash flow? Going out and creating more production? No, they're returning it to shareholders and share buybacks. And so when you have the inevitable capital rotation back into oil stocks, you have less shares. So you're going to have even a bigger return. I mean, this might sound simplistic thinking, but this is how I'm envisioning things to happen. And that's where we're kind of focused um, uh, in the Actionable Intelligence Alert newsletter. I have several companies that are doing quite well at these oil prices. And what are they doing? They're buying back shares. So again, sentiment in the oil, I think I showed this maybe a week or two ago, but I just wanted to reiterate it. Sentiment in the oil market is at COVID lows. Remember? That was a that was a that was a buying opportunity. That was a score that I made that we talked about back when that happened, if you recall. I mean, think about it, it was like 4 or 5 years ago already, right? So, um, that was a long time ago, but we're back down to those sediment levels now. That was a generational buying opportunity. Am I suggesting that it's a generational buying opportunity now? Maybe not, but it's definitely a buying opportunity unless you think oil's going away, unless you buy I mean, if you haven't sold by now, what you're now just going to come in and sell this market short? I mean, I guess you could, but I'd like to hear your reasoning and your argument. And so things are extremely bearish, way out of whack from the historical norms. And I just think it's a decent setup for a move higher in the oil price. So this is Urenco. This is that consortium. I think it's Great Britain, the Netherlands, and somebody else that does the enrichment and conversion uh, of uranium. This shows their order book and the SWU price end of the year. You can see what's been happening for the last several years. Their order backlog is the highest it's been in 20 years. So again, um, people are negative. Again, price drives sentiment. Uranium stocks are down, so the sentiment's bad. I mean, I don't know what to tell you. All the fundamentals are good though, and getting better. I mean, Urenco basically has a bottleneck. They're expanding production, as I understand. They're adding to their ability to produce more. But I mean, it's not a publicly traded company, so you can't invest in it. But I think this just suggests, you know, that the demand for uranium fuel is not going away. It's actually increasing. Okay. And so ultimately, the backlog gets worked down in order to, this all feeds back to ultimately the um, uranium price. So if you're a utility, what you have to go out and talk, the last thing you do is you set up all of your enrichment and conversion and enrichment and all that stuff, and then you go get the yellow cake to feed into that, right? And so there's a bottleneck. There's in this, and it will get resolved over time. And I think that again, the fundamentals just continue to get better for nuclear power. And we've had some challenging events with some of the companies, some of the miners, but again, goes back to what we've said before, mining is hard, and mining is a very fly by the seat of your pants, speculative uh, investment, if you will. I won't even call it an investment. It's a lot of speculation, and it's very volatile. And so this is what we're seeing. But ultimately, the fundamentals are continue to get better. They're very best they've ever been, probably in the history of this industry, and continuing to get better. Nuclear power is the future of the world. And so these things will resolve. And, this is like, again, the highest backlog they've had in 20 years. What does that tell you? I would like to own part of this company. If it was publicly traded, I probably would own part. I would buy shares in it. But this is how things are. Again, price is down, spot price is down, and whether we like it or not, that is what drives sentiment among retail investors. It's just that simple. So again, we've talked about this in the past. This is just a reiteration of what these companies said before. It says Amazon, Google, and Meta support tripling nuclear power by 2050. Amazon, Alphabet's Google, and Meta platforms on Wednesday said they support efforts to at least triple nuclear energy worldwide by 2050. The technology companies signed a pledge first adopted in December 2023 by more than 20 countries, including the U.S. at the UN Climate Change Conference. Financial institutions, including Bank of America, Goldman Sachs, and Morgan Stanley, backed the pledge last year. Meta issued a call in December for nuclear developers to submit proposals to help the tech company add up to 4 gigawatts, that's 4,000 megawatts of new nuclear power in the U.S. And so you have this, new energy secretary that is very pro-nuclear. This administration's pro-nuclear. I think you're going to slowly come as industry and the government come together Banks are behind it. It's a perfect setup. Okay. As we've talked about this before, this is what we said needed to happen. It looks like it's slowly but surely starting to happen, where you get this, everybody comes together, they come up with a plan, and then we can, funnel this investment into this nuclear power build out that we need to have happen in the US. So the gold price, I think the spot price dropped slightly back under 3,000, but it was over 3,000 this week, which is a new record high, by the way. I think I've pointed this out before, but we're getting ready to enter the period over the next several months into the summer, spring and summer, where seasonality picks up for the gold price. Uh, that's no guarantee that anything will happen, but we could be in a situation where gold, kind of hangs out. I mean, that 3,000 number is a big number, so we'll probably chop around that number. But and it still doesn't have a lot of big retail interest. And so I hope that the 3,000 number and starting, this capital rotation that we're starting to see out of tech and out of the AI bubble starting to deflate, starting to bleed out, that capital's coming out and now starting to go into other areas. And so I remain hopeful that, with these gold prices where they're at, margins at these gold companies hopefully will start attracting generalist investor capital. It's not going to take a lot to get these stocks to move. They are moving. They're starting to move. I think the GDX is starting to move finally. So I think there's tremendous opportunity available, even in the big, large cap gold miners, several of them. And then, just start working your way down into the intermediates and into the small caps and then eventually into the developers and things like that. So I think we're setting up over the next year or so for a really tremendous bull market in the gold shares. Of course, I've been saying that for a little bit over a year. But I think we're getting closer and closer to that being realized, especially, one of the things I had said many times was the fact that we needed the shine to come off the whole AI thing because it was sucking all the oxygen and capital out of the room. And so that's starting to happen. And now as capital rotates into these other sectors that, I've been talking about, emerging markets, uh, back into commodities, things like that. Um, as these things start showing up on screens, as people's, if you're running money, and you're falling behind because you don't own any of this stuff that's going up, but your tech's bleeding out, well, you're not going to have a job for much longer. So that's going to cause, people are going to start rotating capital into what's winning, what's working. That's what these guys do. And, these areas of the market that we're involved in, that we're bullish on, they don't have large market caps. And so if you try to stuff, you know, if all this trillions of dollars starts, hundreds of billions or trillions of dollars starts coming out of tech, and tries to rotate into these value stocks, there's just not, they're really gonna take off. They have the potential to take off because they just have the market caps are so small relative to the cap from where the capital's coming from, and so it will have a large impact on the share prices. That's what I'm hoping happens. We'll see. It looks like things are starting to work now in the portfolio. We've kind of been in a holding pattern or slightly down, underperforming for the last year. I admit it, but it looks like things are finally going our way. And, when we do get it right on these things, we have a tendency for these things to really, really run hard. So, if you're on the fence or if you're looking at, areas of the market that could outperform tech, or if you share the view that tech is overvalued and capital is going to rotate, then I think we have a lot of good ideas in the Actionable Intelligence Alert model portfolio that I would suggest that may be of interest to you. So this is interesting from this guy, Shrub guy, Les Shrub. He's quoting a Bloomberg today tweet, but he says China just embraced passive investing. That would be interesting because, I'm positive on China. If China can get people there to invest long term, and have passive flows like we had. We saw what happened over at least over a decade or more of when passive investing became popular in the US and how it just drove stock prices in the indexes higher and higher and higher. So the tweet that he's quoting here says China is considering a 50% pay cut for mutual fund managers whose products underperform their benchmarks. And so you say, well, what does that mean? How does that mean embrace passive investing? Well, then you move closer to the indexes, right? Because your benchmark is the index. And if you don't want to underperform it, if you want to get a pay cut, then you're going to start buying things that are in the index, right? So you don't underperform it. So, you know, that's one of the things, hopefully seeing Chinese people move to investing in the market via, these type of vehicles could be a tremendous amount of savings, tremendous amount of capital moving into Chinese stocks, via passive investing, which again, we saw with the result of, a decade and a half or 2 decades of that in the US, what it did. Am I saying it's necessarily a good thing? Not necessarily, but um, it could be quite positive. So this is another thing that people, a lot of the midwits or people that just don't understand what's going on real politic or policy, they have a have a reference point of tariffs and these things being the 1930s Smoot-Hawley and all that, and they may have learned in some high school or college economics class that helped create the Great Depression, so they're against tariffs and all this stuff. One of the reasons that we need to have tariffs for certain industries is because we need certain industries to be functioning in the US if we're going to remain a superpower. This is a perfect example of what I'm talking about. I put here as the head of the slide, how can the US be a superpower? What am I referring to? This chart or this graph shows you global commercial shipbuilding in 2024. Okay. And so we have no shipbuilding industry here because as we financialized our economy, we allowed that to atrophy and move overseas to cheaper areas like Japan, South Korea, and China. China dominates global shipbuilding, right? I thought this was extraordinary. Um, it shows that China has 53% of global shipbuilding capacity. South Korea has 29%, Japan 13%, the rest of the world 4.4. The US has 0.1% of global shipbuilding capacity. How are you a superpower? Now, the thing people say, well, that's, you're talking about commercial shipbuilding. We have, these yards in Pascagoula. Look, if you want to increase, if you get into a war, if you get into a situation where military build out or you're trying to build against China and be a maritime power, which the US is, by the way, okay, and you have no shipbuilding, it's not just about, it's about the skill sets. It's about the welders, the electricians, the pipe fitters, the engineers, naval engineering, the capacity in the yards, the dry docks, the graving docks, the cranes. If you don't have that stuff, and all of a sudden you get into a situation where China is militarizing and expanding their navy, and you're trying to keep up, you have no shipbuilding capacity. How are you going to be a superpower? What are you going to do? Outsource it to South Korea and Japan? Are you really a superpower if you only, that's why you have to have tariffs because you have to have certain industries. You need to have steel making capabilities in the US, okay? If you don't make your own steel, how do you make tanks and artillery pieces and ships? Again, are you going to import it from Japan and South Korea? Are the Chinese, if they've built up their navy, can interdict and keep that steel from coming here? And do you want to be reliant as a superpower? Are you going to be reliant on other parties for your steel? Does that make sense to anyone? That's why you have to do this. Is it going to cost more for other products? Yes, but that's the trade-off. Okay, that's the trade-off. And See, that's the higher order realpolitik thinking that the average midwit doesn't get. Well, tariffs are bad because I learned in high school in economics in 12th grade that Smoot-Hawley tariffs caused the depression. Well, if you have no aluminum smelting capability, if you have no steel making capability, if you have no shipbuilding industry, I mean, what are you, Ethiopia? You're playing the part of superpower. This is the problem that happened. This has been exposed, what we've seen in this war in Ukraine with Russia, where you have an industrial power that didn't let its industry atrophy, i.e., Russia, that is outproducing. Yes, the GDP of the US and Europe is many, many times more than Russia. But what are they talking about? What's the GDP? Banking, insurance, money management, financialization products, all that crap. Where's the steel making? Where's the energy production? Where's the coal? You need these things if you want to be, and it's been exposed now because Russia, even though it has an economy that's substantially less than the United States and Europe combined, is outproducing them in armaments. Just look at artillery shells. While we could ramp up if we wanted to, how long will that take? You can't do it in a year or two. It would take a decade or more. Again, if you let an industry atrophy, if you let a shipbuilding industry atrophy to the point all the tradespeople go away, there's no people coming into that trade. Why do I want to get into shipbuilding? All you'd ever do is get laid off. That's what a young guy thinks. I'm not going to, why be an electrician in a shipyard? Why be a, steel worker in a shipyard? I'm just going to end up getting laid off when this destroyer contract at Ingalls ends. Then I'm going to get laid off. Then what? That's not a way to live. That's why it's not just about, flipping a switch or we could do it if we wanted to. What's that got to do with anything? China is doing it. And again, it's not just the ability to make the ships. It's the engineering, it's the management, it's the financing, it's all these supply chains. None of this, all this stuff's been allowed to atrophy and rot away. That's why you have to have tariffs for certain industries so that you can rebuild these industries. They are national security priorities. And all these previous administrations, because of the financialization of, hey, it's just cheaper to outsource everything. Oh, it's the end of history, Fukuyama. The U.S. is a global superpower. No one's going to challenge us. Based on what? There was a lot of poor thinking going on and a lot of assumptions made, and quite frankly, a lot of chauvinism and arrogance by the United States and Western Europe. Now they've got themselves in a jackpot. So it goes down here, it says China's shipbuilding sector has undergone a striking metamorphosis. 20 years ago, the country was a peripheral player in the global shipyard business. Today, it dominates the industry. At the heart of this transformation is the China State Shipbuilding Corporation, the world's biggest shipbuilding group. The firm, now get this, the firm built more commercial vessels by tonnage in 2024 than the entire U.S. shipbuilding industry has built since the end of World War II. So in one year, China built more shipbuilding, more tonnage of ships than the entire U.S. industry has built since the end of World War II, 80 years. And you want to say the U.S. is a superpower? I don't know how you define a superpower. So let's talk about steel. This is numbers from, a couple years ago, I think. Here's the top 10 steel makers in the world. China, 1 billion tons. I think it's 2022 data. I got this off Chat GBT, so caveat emptor, it may be wrong. Look at the so look at China, 1 billion tons a year of steel. Look at the US, 80 million tons. Okay, not even 1/10. Where's Europe on here? Well, here's Germany at 37, but that's going to be shutting down because energy costs. I mean, Iran is number 10 for heaven's sakes. Turkey is right up there with Germany. Brazil, okay? Russia has almost as much steelmaking capability as the United States. Again, how can you be a superpower without your country making any steel? Well, we'll just import it. So China's going to export steel to you so you can build tanks to use against them. I mean, does that make sense? I know that's simplistic thinking, but that's the thinking, right? That's why that's another reason why you have to have tariffs. You have to have an industry here. You have to preserve it for national security reasons. Not just, Trump's just pulling this out of his butt because he never thought about, I mean, this has been thought out. And so the previous administrations, there should be anger towards them because you're not a superpower if you can't have any heavy industry. I'm just sorry. If you can't produce the aluminum, if you can't produce the titanium, if you can't, you know, and all the things that go along with it, and the engineering and the people, qualified people. When I was a young kid in high school, I went through a jet engine metalsmith apprenticeship with a subcontractor for Pratt and Whitney, and we would make engine parts for their various programs, and it was very interesting. Okay, I learned a lot, and I went through an apprenticeship. It was a year. We would work in different areas of the plant for a couple few months at a time, welding, metal spinning. I mean, the metal spinning, these guys were really craftsmen. Okay, and machine shop, production machining, all these things. Okay. We take in raw sheets of steel and out product would go combustion chambers and other things, laser cutting, all this stuff, all the inspection that went along with it, the tight tolerances. Okay. All these things. And those skill sets, those people, if they're allowed to just go away and go into other things, you lose that. That's that corporate knowledge. So we're going to go into the political section. I'll take a sip of coffee here and give the people that are interested in the political commentary a chance to disembark. So we called this several years ago. It was just a math problem, a physics problem. But it says like the Bill Gates era of climate giving has ended. I'll put links to these articles in the show notes if you want to read them. Said Breakthrough Energy is winding down its policy and advocacy office, depriving the Inflation Reduction Act of a powerful defender. Breakthrough Energy, the climate philanthropy organization founded by Bill Gates, is closing its policy and advocacy office and has laid off much of its staff in Washington, D.C. Quote, this is from Gates. Right now, companies are responding to the IRA incentives. But if you get Trump elected and he really gets rid of it, there's a lot of business plans that will make people feel foolish, he said. So long story short, politics matters, elections matter. Um, I'm grateful that the United States kind of figured out how stupid this was and what a grift it was. The people figured it out because the people in Europe are still going down this road. I think, as a matter of fact, um, I don't remember which country it was. Maybe it was the EU in whole, or maybe it was just Germany, re-emphasizing their 2050 goals for net zero. Okay, this self-destructive behavior. And so you see that the people there don't want it, but the politics, the EU people running the EU don't care what the people want. That's not why they're there. Democracy, what's that? We'll get into that a little bit too. But we called this peak ESG, peak climate change, peak DEI, peak stupidity. Okay. This is all a grift for a bunch of people to get their hands on undeserved wealth and power. Okay. Do I think any of these people believe in any of this stuff? Maybe they do, maybe they don't. I don't care. But there was trillions of dollars involved. And so, that's what this, in my mind, was about. And so it's ended now. That doesn't mean that if you get Gavin Newsom in there in 2028 in a Democratic Congress, they'll resurrect this thing like a vampire. They don't, I mean, they don't have any beliefs. Their belief is more power and creaming off money. And people say, well, that's cynical. They're not, it's not really, yeah, it is like that. That's exactly what it's like on both sides of the aisle. Let me emphasize both sides of the aisle. Where are these angels that you're going to find that we're going to put into the federal government that are going to magically make our lives better? These people are not there for you. Have you not figured this out yet, people? You're entertained, I know that, but have you figured out what's really going on yet? Well, so here we have, I love these type of stories. Europe's would-be battery champion, Northvolt, files for bankruptcy. Here we go again. Have any of these stupid government-financed initiatives around making batteries in the US or in Europe ever worked? Not one that I can think of. If you know of one, put it in the show notes. You, if China decides it's going to get into batteries, you're going to get smoked. If China decides it's going to get electric cars, you're going to get smoked. If China decides it's going to get into AI, you get smoked. We're not going to let them use high level chip making capacity made by ASML. They'll just develop their own. I mean, what do you think you're dealing with here? A billion, 1.1 billion people that graduate more STEM people every year that exist in the entire United States. What do you think's going to happen? This is another grift. People made money on this. Politicians made money. People running the company made money. And in the end, you walk away from it. And so what does it say here? Battery cell maker Northvolt has filed for bankruptcy in Sweden, the company said on Wednesday, marking one of the country's largest corporate failures and effectively ending Europe's best hope of developing a rival to challenge China. The EV battery maker sought U.S. Chapter 11 bankruptcy protection in November as its cash pile dwindled and it scrambled to secure funds to fix problems, boosting output at its flagship plant in northern Sweden. The Swedish company has received more than $10 billion in equity. You could have built several nuclear power plants for that $10 billion. That's my own comment. So they received more than 10 billion in equity, debt, and public financing since 2016. And its biggest owners include Volkswagen with a 21% stake and Goldman Sachs with a 19% stake. So you're not, if China decides to get into something, you're going to get smoked. You should get out of the business. We have certain niches we can do well in, okay? Nuclear power is something that we can compete in. We need to be pushing the envelope. And now we're running to catch up with China again. When are people going to understand this? If China decides to get into an industry, you should just get out of it because you will not compete with them. It's that simple. So I don't know what to tell folks, but you know, BYD 5 or 6 years ago was a joke. It's the best, probably makes the best cars in the world now. Do you see a lot of BYDs driving around in the US or Europe? You see them all over the emerging markets. So evidently, the democracy for all continues in Romania. I'm not an expert on Romanian politics by any stretch of the matter, but I am good at pointing out, as Vice President Vance did at the Munich Security Conference, the anti-democratic uh, what's going on in the EU and especially in Romania. He mentioned it by name. And, the first fella, Georgescu, uh, has been banned from running for president. I think he's the most popular candidate there. So he's been banned because, he's pro-Putin, evidently. See, this is what they can do. They can just label you and then disqualify you. That's how they do this, see? So now, evidently, there's another candidate they don't want, and so she's been disqualified. I need to do some more research on this. Maybe I'm wrong. Again, people from the EU or Romania can weigh in if we have readers there. But supposedly, Romania has banned another candidate from running in presidential elections. I can't pronounce her name. Diana Ivanovici, I can't, has been banned once before for pro-Russian views, whatever those mean. I don't know what that means. Electoral Commission decision comes days after also again banning frontrunner Georgescu from running. This is the quote, free EU. Why not let the people decide? That's what a democracy, because they're not democratic, right? The people are wedded to the EU project, which is centralization of power and money in Brussels under a bureaucratic, technocratic. elite. That's what this is about. And they're not going to let the people uh, control anything. Again, well, what should we do, John? You're going to literally have to go in there, pick them up physically, and throw them out. That's what you're going to have to do. But just keep voting harder. Now you can't even vote harder because they won't let you. It'll be like in, East Germany or North Korea or the Soviet Union. They had elections there too. They put candidates up or one candidate up, and everybody would vote for the one candidate. See, democracy. You know, I think there's opportunities in Europe here and there because of mean reversion. If you live there, you have to leave. They're talking, I think another thing that hasn't been talked about a lot recently in the EU is now the big push by the EU central bank to get this central bank digital currency up and running. I mean, it's going to be like living in the Warsaw Pact in Europe. I mean, the thing's going to implode. It's going to fail. There's too many internal contradictions in the EU, like there was in the Soviet Union, and it just implodes on itself. It can't continue because of all the internal contradictions, because there is no foundation. It's ridiculous. And so as people get poorer, and people more and more lockdowns, I mean, you're coming to a head on this immigration thing very quickly. And there was a good uh, video. I'll try to find it if you're interested. Forget the man's name. Is a professor of military history and warfare at King's College. It's not John saying this. It's a guy that's actually an academic, and he was talking about the coming civil war in the UK and in the EU. And he wasn't necessarily talking about like people have this vision of a civil war, like people lining up in a battlefield, like Battle of Gettysburg and like the U.S. Civil War. It doesn't have to be like that. It can be like, uh, he described different ways it could manifest, but you can see it coming. Okay. I mean, a third of the population of Ireland now is now foreigners, and people have had enough of this. What is going on in the EU? Why are the EU technocrats bringing in unmarried military age men by the millions? What are they doing? Well, I know what they're doing. They're coming to displace you, get rid of you, of the native population, to displace you, to terrorize you, to demoralize you. I keep putting it on Twitter. That's my new thing. Every time I see a woman harassed by a sub-Saharan African or Middle Eastern man in Europe, when I see them camping out in a theater in France, when all these things like vignettes and anecdotes I see on Twitter, what do I put? When will you wake up, Western man? That's my new phrase. When will you wake up? You're not going to vote your way out of this. That's where I'm going to stop this conversation. I tell people, well, what's the solution? You need to look at the historical narrative of what has taken place in the past. Again, it's going to require levels of violence that the average person can't conceive of. And when they start thinking about it, scares them silly. But it will happen eventually. It will happen eventually. Other, you know, there were suggestions made. I've made suggestions in the past. You can stop the immigration. You can suppress Islam. There's ways to do that. You can deport all these crazy people the things that are said in the West in these mosques are not even allowed to be said in Egypt or Iraq. They would be arrested by the state for saying the things they're saying. It's too radical even there. Okay. So we just allow it in the West. And so we are so uh, the people have been so feminized, the people have been so made to hate their heritage. The people that you're standing on, your ancestors spent hundreds of years expelling Islam from Europe for a reason, and you're just giving it away or bringing in the peasant class. Why are you bringing in all of these young military age men? They don't have any skills. They have no ability to contribute to the GDP. They loiter. I mean, everybody knows what's going on. Everybody knows what's required. Nobody's willing to do it. What so it'll either happen where you get stop them from coming, encourage them to leave by suppressing Islam and making life difficult for them, giving them cash to leave, or you're just going to have to physically expel them. And do you think they want to leave? Do you think they're going to leave voluntarily? Do you think you're going to sit down and say, well, this isn't really working. Can you please go back to wherever you came from? They're not going to want to leave. And so you're going to have to use, that's what I mean. You're going to have to use levels of violence that are inconceivable to fix the problem. And that's not going to be done by Kaja Kallas and Ursula von der Leyen and the rest of the, women in the EU. First of all, the EU needs to break up. Countries need to become more inwardly focused and nationalistic, and there's not enough time. You're getting to levels of population now where you have major cities in the UK, mayors are all Islamic. Your Minister of Education looks like some guy that just stepped off the boat from Pakistan. The Minister of Justice, I think, is an Indian in the UK. Where are the Englishmen? People say, well, that's racist. I don't believe in magic dirt, that you just get off the boat, get down and kiss the dirt, and all of a sudden you're whatever. That's not how this works in my mind. And these people come here and wave flags from the country that they left. There's no assimilation. There's no, what values are they supposed to take on? What are the values of Western man? We used to know what that was. We don't anymore. They've told you what they're going to do. And so the EU, in order to stop this type of thought from coming out or manifesting through the democratic process, is going to use whatever means it needs to suppress it. And when they get the CBD, the central bank digital currency, euro in there, that'll be another tool they can use to suppress dissent. Well, you said something that we didn't like against, what we're doing, so we just cut your bank accounts off and cut you off. You see how this works? I don't know what the ultimate goal is of these people. If they think this is, but this is really not going to work out very well for Western Europe. I can tell you that right now. Okay, guys, that's it for this week. Thanks for subscribing. Thanks for watching. And we will talk to you next week. Thank you.